Hey guys, how's it going? Good afternoon. Today is Tuesday, September 13th. It is 1:58 right now, about 2 minutes till 2, our scheduled time for this group mentoring session. So let me just finish setting up this room and then we can get started with the session for today. So just a couple more things here to update, not too much. Get this stuff down here and then we should be good to go. So let's see, looks good. Good. Solid. Good. Couple more things right here, and we should be good to go. Solid. Looks like we're good. Let me just update this real quick and get this link sent out to you guys here in the premium. All right. There we go. All right. So I'll give it a few minutes for people to make their way in. And once people join in, we can get started shortly. Let me see if there's anything that I'm missing here. Let me see what the sentiment's looking like. Kind of want to see what we're looking for, for the rest of the week. Sentiment's super heavy right now. So sentiment's actually 62% long. So we're probably going to be looking for some shorts all week. We'll see how it plays out. Sentiment is super down. That's crazy. The market was down 1,244 points. I haven't seen the market this down since like COVID. I've never seen it drop this much in a long time. Did the market really drop that much though? Let me see. I wasn't trading, so I wouldn't really know. But I did see a couple people post profits. Yeah, this thing tanked pretty heavy. Jeez. Yep, tanked about 1,600, 16,000 points actually, or 16,000 pips. That's crazy. So market from this morning, just from that inflation news, market dropped 16,000 pips. So 1,643 points. That's a huge drop. It was like COVID numbers right there. So, all right, guys, good afternoon, everybody. Today is Tuesday, September 13th. It is 2:01 right now. Our scheduled mentoring session was for 2 p.m. So I'll give it a few more minutes for people to make their way in. But if you guys have any questions or want me to cover anything specific, feel free to put your questions in the chat and then we can get started with this session for today. Otherwise, I don't really have any other questions lined up at the moment. So we'll pretty much be looking at whatever questions you guys have today. Hey, Goldie, how's it going? But yeah, the market did drop pretty heavy today. I haven't seen it drop this many points in, I can't even remember. The only thing I could think of is COVID times. That's crazy. Dow tumbles 1,200 points for the worst day since June 2020 after a hot inflation report. So pretty much since COVID, right? Like we haven't had a day like this since June 2020, which I think was the year of COVID. That's when, we're in a complete shutdown. So, it's pretty intense to see a drop like that happen. But it'll recover at some point, right? Well, maybe not anytime soon because there's so many traders on the buy side trying to buy the dip. Yeah, Goldie said that sentiment was at 60% long all day today. So that's a good thing, guys. Don't worry. If price is dropping like that, that's completely fine. And if retail traders are looking to buy the dip like that, that's completely fine because we're going to do the opposite anyways. So if they want to buy, we're going to continue to sell. So we'll see where the market goes. It's only Tuesday. We have some more inflation news tomorrow. So it's just the beginning. Today we had CPI, core CPI news. Tomorrow we have PPI and core PPI. So basically the same thing. It's just that today was consumer price index. Tomorrow is I forget what the PPI stands for, but it's something, it's similar to inflation. It just relates to it. I'm kind of curious now. I want to look it up. PPI inflation. Someone mentioned it. Oh, okay, producer price index. So it's the same thing. It's just instead of consumer, it's now producer price index. So this is, I'm pretty sure it's going to drop price again tomorrow, because if today was that bad, tomorrow is just going to be just as worse, if not worse than today. Then we have unemployment claims on Thursday. A lot of people got laid off, so unemployment claims should be higher. Philly manufacturing index, retail sales, Empire State manufacturing index, core retail sales, etc. So we should expect price to continue plummeting. I think during Asia session, we might have some sort of slight recovery. So price might go up slightly during Asia session in London. And then as we get back to New York tomorrow, it'll probably, dump once again. Goldie's asking, forecasting a bearish week. I mean, I guess so. If it's inflation news all week and it's not going to be good due to the recession, then yeah, I mean, we could forecast. But I never tell people to forecast, right? Like you could gamble, flip a coin, you could forecast whatever you want, but it doesn't necessarily mean it's going to go that way. So I wouldn't necessarily say forecasting it for the entire week, maybe for tomorrow, but not the entire week, because this isn't necessarily going to stay at 60%, right? I mean, it doesn't necessarily have to stay at 60%. If price continues to drop and the retail traders switch to the short side, this can easily go back to 50-50 by tomorrow. So I wouldn't say the entire week, but maybe tomorrow, yeah. I just don't forecast that far ahead of time. A lot of people like to do that. A lot of times people are wrong, right? So what I would recommend is to forecast for the time trading. So if you're trading right now, forecast it for like the next hour, next couple hours, maybe the next 24 hours. But forecasting into the week is dangerous, because if you just look for sells for the entire week, that could go your account. Yeah, exactly. Goldie said true because we scalp. I mean, either way, if you're trading intraday, you shouldn't be looking that far ahead. Because, for example, you can take a sell today, price can correct. So like, this is what I kind of see happening right here. There's going to be two types of people. Some people are going to see this drop right here. Some people are going to see the correction, right? So they're going to buy at this point. That's what a lot of retail traders are doing right now. Like right here at 62% long. Basically, the intraday and swing traders are looking to cash this correction back up. That's why there's so many people on the buy side. However, that doesn't need to happen. Like, this can happen. That's one scenario. Price will correct back up to fill, this big drop from today, or the complete opposite can happen, right? It can fill that, or price can push up slightly, fake out, just allow for some more buyers to enter the market, and then dump down even heavier the next couple of days. So it doesn't really matter. I mean, I'm not looking that far ahead, but yeah, you're right, Kodi. Since we're scalping, it doesn't matter what happens a week from now, 2 weeks from now. What matters is what's going to happen tomorrow, because the next live session is tomorrow morning. So I don't really care what's going to happen during Asia or London, but I'm going to use that to my advantage. So for example, if I see price going up and I'll just mark up the times right here. Asia session is about to open shortly, right here at 1500 hours, and we'll color this blue. So basically this is going to be Asia session from here up until here, right? And then we're going to get London from here up until here. So we can see a lot of consolidation on this area. Probably price will push up a little bit, consolidate, push up a little higher, consolidate, push up a little higher, just to lure in some more buyers. And then once price is high enough, once we get to New York session tomorrow, news is going to be released right here at 5:30, slump right back down. And I think news is being released at the same exact time too, 5:30 a.m. Yep, 5:30 tomorrow, PPI, core PPI. So we'll see where that goes. But anyways, guys, if you guys have any questions or want me to cover anything specific, feel free to put your questions in the chat. I don't have anything scheduled for today or any questions scheduled. So whatever questions we have here is as long as the session will go for. So I think you wanted me to take a look at the V1 variation, right, Goldie? I can't remember if that was you that asked for it, but I'm pretty sure it was you. If you still want me to look at that, just let me know. We can take a look at it. But again, I'm not recommending that you guys trade any of those other strategies right now. It's just not the market condition to be trading those type of strategies, but I'll show you it anyways, just to give you a refresher on how it's applied. So in order to apply these strategies, you have to confirm the overall bias, right? This is going to be difficult for you to confirm if there's no sentiment. Like this morning, it was 50-50 like all morning, right? So you couldn't take any trades with sentiment. In order for you to take a trade in direction of sentiment, you need it to be at least 60% or more. Right now, it's 60% or more. That's at 62. So you do have a sentiment. So looking over here, you want to confirm the overall bias, retail sentiment, fundamental bias, and technical bias. First is going to be retail sentiment, right? If retail sentiment is currently 62% short, your threshold is going to be 60%. Anything above that's fine. You're going to be doing the opposite and looking for sell. So with that said, we have a sell bias with regard to retail sentiment. Second, you want to look at fundamental bias. In order to identify fundamental bias, you're going to look at the fundamentals over here. Market's currently closed, so this hasn't been updated for the past couple hours, but this one here has updated. So with that said, this is more than 100 points in one direction. It's 1,000 points. So with that said, we have a sell bias with regard to fundamentals. We have a sell bias with regard to retail sentiment. Those two confirm a bearish bias. Lastly, you want to take a look at technical bias. In order to do that, you'll look at the trend meter down here. It's currently red. You can also turn on the pivots if you prefer to. Prices like right down the middle. So the pivots are neutral, but the trend meter here is bearish. So with that said, you have about 3 confluences confirming that the overall bias is bearish. And with that information, you're going to be looking for sells here. So once you confirm the overall bias, you can look for variations in that direction. And once you have that, you'll just look for the first entry. So let me just go backwards here a little bit and see if I can find any entries here that would satisfy the requirements. So I don't see anything over here right now. You're not going to see too many of these entries here because the market isn't really trending very much. But if I see something here, I'll show you the example. I don't see anything right here. So we got to keep going further. There is nothing here. Got to go further. Here's one right here. All right. So just as we mentioned earlier, our first requirement is to confirm the overall bias. We're going to assume that it's bearish right here because we just confirmed that. Second requirement, you want to confirm the high-low using the K2 high-low indicator. So what you'll do is you'll turn on the K2 high-low indicator. I'll turn everything off right here. So you'll see we have a clean chart. You want to use the K2 high-low indicator. If you don't know what to find at, go to indicators, go to invite-only scripts, and then you will find them right here under the Kodi trades indicators. It'll be called K2 high-low. You turn that on, and you'll have this on your chart. So you confirm the overall bias for a sell. Second, you want to confirm the high-low using the K2 high-low indicator. With that said, we have the high right here, and we have the low right here, right? Third requirement, you want to confirm that the candle following the high-low is a double wick or a double body rejection. So let me go over here and replay this real quick one more time over here. Okay, so it doesn't have to be right after it. It just has to be before it or after it. So it has to be right next to the candle. First requirement, we confirm we have a bearish bias. Second requirement, we confirm that we have the high-low here. Here's a high, here's a low. Third requirement, you confirm that the candle following the high-low is a double wick or double body. So with that said, this right here is the high. We're looking for highs because we're looking for a sell here. This is a double body rejection, right? Reason why you can confirm that is because the bodies are on the same level. If you're looking for a double wick, the wicks have to be on the same level. So it has to be one or the other, either double body or double wick. Right here with the double body, that fits the requirement. So that's going to be requirement number 3. Requirement number 4 is you want to confirm a pending momentum in the direction of the trade. So in order to do that, you're going to turn on the K2 momentum indicator. Actually, sorry, this isn't going to be an entry here because there's no pending momentum. What was I looking at earlier? Okay, so there was no high there. Sorry, let me just go back a little further. So this is what I was saying about earlier. You're not really going to find too many entries here. I thought I saw one there, but I mistakenly thought this was a high, but it wasn't. So let me just keep going further. All All right, so I'm just going to use this as an example right here. It's going to be okay. Thanks. Let's see. Eric said 1121 for a V1. So let me go over here real quick. Thanks, Eric. Oh, Eric said, never mind, there's a signal. Yeah, I know it's going to be hard to find. So Eric thought that he saw one over here at 1121. Yeah, you can't take one with a signal candle on it, unfortunately. But yeah, you did spot it properly. It's just if there was no momentum on this specific candle, then it would have fit. But right now, it's a little difficult because it's just not the type of market for the strategy. So let me just use this example over here. I do see an example, but I don't know if the bias at this time was for this specific type of entry. So I'm just going to use this as an example. We're going to assume the overall bias. You can't really confirm it right now because market is past. You have to look at it at the time of the entry. So with this strategy right here, we're going to assume that the overall bias was bullish. We can't really confirm whether it was bullish or bearish. We're going to use this as the example. So you can see what are you looking for. You just have to add the overall bias on top of that. So with that said, first requirement, we can't confirm it, but we're going to say it was bullish here. Second requirement, you want to confirm the high low. Again, we're going to look at this low and this high right here. Since we're assuming that actually there's a couple entries right here. There's another one right here, but this is harder to tell because you can't see what this candle looks like. But we'll just continue on with this. You want to confirm the high low. You want to confirm that the candle following the high low is a double wick or double body. So we have a low right here. We have a double body. We're assuming that the overall bias is bullish. So the first three requirements have been met. For the fourth requirement, you want to confirm that there's a pending momentum in the direction of the trade. Right here, we have a sell signal. So the next signal has to be a buy. If you look back, they always alternate, right? So we have a sell signal, buy signal, sell signal, buy signal, sell signal, buy signal. So if there's a sell signal right here, the next signal has to be a buy signal. So that's what we mean about pending momentum. So you have a momentum that has to come after. The reason that we want that is because if you take an entry right here, then if you get a momentum push, it'll like automatically push it to your TP, right? Because you can see these momentum candles, they push quite a bit. So if you just measure them, this is like 200 pips. It's enough to hit your TP. This one right here, 200 pips. This one right here, almost 200 pips. So you're only going for 100 pips. So if you have a pending momentum and you get that momentum on the next candle or the next 2 or 3 candles, you'll have like an automatic TP with no drawdown. So again, first requirement, we confirm the overall bias. We're going to assume that it's bullish. We confirm the high low right here. Here's the high, here's the low. Since we're looking for a buy, we only care about the low. We don't care about the high. Other than that, third requirement, you want to confirm that the candle following the high low is a double wick or double body. You can see right here, this is a double body rejection. Fourth, we confirm the pending momentum. And then after that, you enter the trade. So here's the trade right here. Your TP stop loss is 100 to 300. You let the trade run, and there you go, full TP. So it's pretty simple, and this is why we look for that pending momentum. So you can see right here, we had that pending momentum, went straight to TP, no, like little to no drawdown at all. That's an example for a buy. We have another example over here for a sell possibly. Let me see if I could find one. I just want to show you examples in both directions to clear up any possible confusion. So this right here would have been good, but we can't tell what type of candle is that right there. We typically avoid candles like this because you can't tell if it's a double body or not. Question from Goldie. He's asking, does it matter how big the double wick or double body is? Not necessarily. Any type of double wick. I mean, if it's an outlier, like it's a huge candle, then you obviously want to skip it because that will fall under the red flags over here. So I'm not sure if you're familiar with them, but typically we avoid when price is near sessions, price is near opening price, price is near news price. If the candle prior entry is too large. So for this requirement, you probably saw the example from today. You can still enter trades when the candle is too big, but you want to wait for it to retrace because whenever you get a huge candle, it typically retraces half of the candle or a full candle, and then from there it'll either reverse or correct back in the direction of the momentum. So it doesn't really matter too much. I mean, you can still take it, but you would want to wait for it to at least retrace if the candle is that big. Yeah, exactly. Just avoid big candles because the thing is, you have to keep in mind that your stop loss is only 300 pips, right? So if your stop loss is that tight and it has to retrace at least 300 pips, it's going to stop you out before it hits your TP. So let me show you another example here for a sell real quick, and then we'll move along. Or if I can see a double wick, I'll try to show you that too. I just don't think we'll find one because it's just not the type of market right now for, these types of entries. But let me see if I can find one here. Okay, here's another one right here. Here's now for a sell. All right, so we're going to assume the overall bias is bearish. Obviously, we can't look because this is previously in time. You can't check what the bias is at the specific time period. Maybe at some point I can figure out how to create an indicator for that. But right now, there's no data points that I can pull to implement them into TradingView. So with that said, we're going to assume that it's bearish. We're going to confirm the high low again. Since we're looking for a sell, we're only looking for the high. This is the high right there. Confirm that the candle following the high low is a double wick or double body. Right here, we have, again, a double body rejection. Confirm that we have a pending momentum. This is a buy signal, so the next signal has to be a sell. But that said, we'll enter a short right here. Same thing, 100, 300. And this is how you can tell that the candle is not too big, right? Because if it does retrace up a little bit, it'll probably retrace to either half this candle or full. Your stop loss right here is still far enough to prevent it from getting hit before hitting your TP. So with that said, we have all the requirements met. Let it run. And there you go, full TP with little to no drawdown. So hopefully that makes sense, Goldie. If there is still some confusion, just let me know. I'll keep looking back to see if I can find a double wick, but I don't think we're going to find one because we don't really have much of a directional movement in the market lately. Goldie's asking only in trending markets. So here's the thing. If you can't confirm the overall bias, there's not going to be a trending market or directional market, right? Do you get what I'm saying, Goldie? That's why we don't apply the strategy right now, because this morning it was 50-50 on retail sentiment. So if you have 50-50 there, you're not going to be able to confirm an overall bias. Does that make sense? That's why you can't apply this strategy during ranging markets like right now. Like the market is obviously one-sided right now, but this morning it wasn't like this. It was 50-50. Does that make sense, Goldie? Just want to make sure that you're getting it. Sentiment is the most important, yeah. So if there's no sentiment, there's not going to be a bias because you can't just use the technicals and the fundamentals. You can use fundamentals and sentiment, but you can't use one or the other. So you're typically only taking these trades when everything is one-sided. So if everybody's buying, we're going to do sells. If everyone's selling, you want to take buys. You just want to make sure that they align. Yeah, no problem, Goldie. I know it's going to be hard to look for examples now, but once we enter the fall season, it's going to be super easy. Like, I don't know if you were around back then, but like before summer, like in May, basically January until May, we just took these entries. Like we took so many, there's like about 4 or 5 that come up every day, and they would go straight to TP with like little to no drawdown at all. And there were more examples. Like we could find them like so many in one area. So yeah, hopefully like by the next couple weeks or by next month, it'll definitely be a little more prevalent in the market. But right now, it's just not too noticeable. Let's see. Marco said, yo, I wanted to welcome one of my friends to the fam. Parker, Sean, can you go over the SR strategy we're using now so he can see what it looks like before his first live session tomorrow? Yeah, definitely, Marco. So yeah, welcome, Parker. I know Marco told me you just joined today, so welcome to to K2 or Kodi Kai, whatever we want to call it. It's we're still going through the whole rebranding, so I got to figure out what we're gonna. It's kind of weird calling everything Kodi Kai, so maybe I'll find another acronym for it. Unfortunately, we can't use K2 anymore, but we'll figure out a way around it. Yeah, no, definitely, Parker. I'm glad that you made it. It's just gonna take some practice and repetition, but you'll see it's the same thing. It's like the same pattern every single day. Marco picked it up super quickly. It's really not that difficult as long as you follow directions and you don't try to do your own thing. I think you should be fine. I mean, you're fine to do your own thing, but most of the time that's where a lot of people mess up because they try to do their own thing and then their own thing just doesn't work as as good as it should. But anyways, let's go back over here real quick. Let's go back to like today's session, and I'll see if I can find an entry over here. So it looks like there's one. Actually, there wasn't. Trend meter right here was pretty much all blue. Oh, you know what? Because the trend meter is not set to chart. Pretty sure it was bearish right here. Okay, perfect. So we got one set up right over here. All right, so let me go down the requirements right here. It should be pretty simple and easy to follow. Requirements for the K2 SR rejection. So this is pretty much the strategy that we're applying during the live sessions for now, because the market is ranging. However, I think this strategy works good in all markets. So this might be one of our go-to strategies pretty much all year round. But as we enter the fall season, the market starts moving directional. We'll start looking for entries using other strategies. But right now, we're just going to focus on this. It's pretty simple. And I'll go over the requirements right here. So we have an example here for a sell. The first thing that you want to look for is a top wick rejection off a K2SR V2 zone. So let me just take everything off real quick, and I'll do everything step by step. So first step is you want to identify a top wick rejection off a K2SR V2 zone. In order to do that, you'll turn on the K2SR V2 indicator. Go to your settings, make sure that you have show body levels on. If you have it off, it's going to look like that, a little different, and you're not going to have actual bodies on the chart. You're just going to have highs and lows. If you turn this on right here, it's going to add a couple more levels to there to create levels instead of bodies. I mean, levels instead of just high lows. So with that said, once you have this lined up here, you can use the rectangle tool like I do to clean it up, or you can just, look straight at the chart. For me personally, I like to draw my own levels here. So what I'll do right here is I'll draw a level. And here's one thing that we get a lot of questions about is what if they overlap, right? So you can see that this level here overlaps with this level up here. So there's a big level and there's a smaller level within it. In order for me to incorporate both levels, I just create one big level. So I just drag this down a little further and I cover this whole area right here, right? In order for me to clean this up, I'll just turn this off. We know that there's a level there because I showed you the indicator. Turn that off right there. And now it's a lot easier to view. Once you've identified the top wick rejection off the K2SR zone, which is going to be right over here, this last candle, you next want to look to confirm that you're trading in the direction of the trend using the K2 trend meter and the K2 pivots. So to turn on the K2 trend meter, you'll go down to the bottom here. In order to add that to your chart, go to indicators, invite only scripts. All the indicators will be right here. So you'll see K2SR V2, K2 trend meter, and then I think the only other two that you're using are K2 pivots and the K2 momentum, which is going to be under K2 Trade's proprietary trading system. And I know this might be a lot of information, so if you need me to go back and review anything, just let me know, Parker. I will go ahead and show you a couple examples, so it's not going to be any, I'll try to clear up as much confusion as possible. But I know with all this stuff that we're covering, there's like a lot of new things that you're listening to and you probably don't understand everything I'm saying, but I'll try to break it down for you as easy as possible. So first requirement, we identify the wick rejection up here off top. Second requirement, we want to confirm we're trading in the direction of the trend. So using the K2 trend meter, right here, you can see that the trend meter is currently red. This is going to confirm that we are in a bearish downtrend. Another confluence that you want to use would be the K2 pivots. You'll turn on the K2 pivots right here. Normally, the K2 pivots look like this. These are default settings. What I did personally is I turned off 1 and 2 because they cross over too much. They're not as strong as 3 and 4. And what I did here is instead of having this orange, I color this green. So it makes it easier to identify what the trend looks like. So right here, you can see when 4 is over 3, this indicates that we're in a downtrend. That's why I have it red and green. So when you have the red over the green, this is going to confirm that we're in a downtrend. Also, that price is below it and these pivots are angling down are going to confirm also that we're in a strong downtrend. So with that said, we have requirements 1 and 2 met right here. We have the top wick rejection. We have a strong bearish bias here. Third, you want to confirm that you're trading in the direction of momentum. So to do that, you'll turn on the K2 momentum indicator and you just want to look back at the most recent momentum candle. Right here, we have a sell signal. So this is going to confirm that we are in a bearish momentum. So we're in a bearish momentum, in a bearish trend. And that's going to be all the requirements. Once you have all that met, you can enter once this candle closes. And one last thing, you want to make sure that this candle is moderate. So in order for it to be moderate, you just want to make sure that the wick on the bottom isn't bigger than the body. And you want to make sure it's not like a doji candle, something like this, which looks like a hammer or a cross plus or a hammer. Those are a couple of things that you want to look out for. But for the most part, if it looks like a moderate candle, it's pretty self-explanatory. Moderate just means that it's not strong, it's not weak, it's like somewhere in the middle. If it's stronger, better. This would be considered a strong candle, but it falls within the moderate criteria. So with that said, you'll enter the trade right here. Your profit target is going to be 100 pips. Stop loss is going to be 300. I know a lot of people don't like using a negative risk reward, but this is only to provide a cushion due to the spread. Like if you look at the spread right now, spread's 320 points. So you're going to have to need some cushion back there in case, price pulls back on you before it hits your TP. And this has all been tested. So we're not just randomly using a wide stop loss and a tight TP. We're doing this because this is just precautionary. We don't enter these trades to expect to lose. We enter these trades to expect to win. So that's why I'm not too worried about having a negative risk reward here, because we've tested it and it has like 96 or more % win rate. So with that said, we'll enter the trade here, let the trade run, and you can see it went straight to profit target with little to no drawdown. So this is an example of the K2SR rejection strategy, basically what we're applying here on the live sessions. Nice. So Parker said he's traded options before, so you understand some of it. Yeah, no, definitely. So if there's any other questions or any confusion that you have, Parker, just let me know, and then I can go down, whatever avenues we need to clear up that confusion. But let me show you another example. So there's one example right there. We'll do it again, go from scratch. Let me see if I can find an entry here, and then we'll go back to scratch. Let's see, I think we might have a buy here. Actually, no, we don't. So no buy entries here. And the cool thing about this strategy is that you can go both ways. You don't necessarily have to stick with, one direction. Whatever you find, as long as it's, it meets the criteria, then you can take it. And typically, I only apply the strategy from like 6:30 to 8. You can apply it throughout the day, but typically from our testing, we noticed that most of the losses come between like 8 and 10, right? 8 and 10 is usually where the losses come around. And then reason for that is because a lot of people, or the bigger traders, go to lunch. So the volatility in the market dies down. It's a lot of retail traders kind of pushing price around randomly. And there's no patterns to follow here. So just an FYI, if you do decide to trade outside of, our normal trading hours. So let me just go over here real quick and rewind a little further. Let's see. It's in a downtrend right here. So I'm looking for any sells, but I don't see anything coming up around here. Today wasn't necessarily the best day, so there wasn't too many examples, or there might not be too many examples to look at. Let's see if we could find something else too. I think there was one more right here. So here's another example of a sell. Okay. So again, right here, you want to identify a top wick rejection off a K2SR V2 zone with a moderate red candle. Only a reason we're looking for sells is because you can see that we're in an obvious downtrend. Price is angling down pretty heavy. Trend meter is red. Pivots are angling down. Red pivots over the green pivot. It just lines up for a sell here. So looking at this, we want to identify a top wick rejection off the K2SR V2 zone with a moderate candle. Right here, we have the wick rejection off of this zone right here. I'm going to go ahead and turn this off to clean it up for you. So again, we identified a top wick rejection with a moderate red candle. We want to confirm we're trading in the direction of the trend. Trend meter is red. Pivots right here are angling down. Red pivots over green. Prices below the pivots. That confirms that we're in a strong downtrend. With that said, you want to confirm that you're trading in the direction of momentum. Looking back, we have a sell momentum right here. So all of the boxes are checked. With that said, we could enter a short position right here. Again, same thing. TP 100 pips, stop loss 300 pips. Once you have that set up, so this is one of the red flags. I think we looked at this during the live session. The thing is, we had a news event right here at 7, so we didn't take it. Another red flag is that this candle here is too big. So typically, if you want to take something like this, you might want to wait for it to retrace a little bit before entering it. But just for demonstrational purposes, I'll just show you how this plays out. Full TP right there. So what you could have done is you could have waited for it to pull up a little bit. And then as price came back down, you could have had a sell stop right there. You could have had your finger on the sell button. So as soon as it came back to entry point, you entered it and then your full TP right there. But going back to the red flags, one of the main things here that you probably would want to avoid or wait a little bit, at least, would be because the candle prior to entry is just too large. So that is another example there. See, question from Goldie. Goldie's asking how many times on average does this strategy pop up during our live sessions? I mean, it just depends on the day, Goldie. Like not every day is going to be the same. Some days it comes up once, some days it comes up zero, some days it comes up 5 or 6 times. When we started applying the strategy earlier in the summer, they came in bunches. So you would have one entry and then another one would come right after it. So they come like 3 back to back to back. So you hit one, hit your TP, you take the next one, hit your TP, take the third one, hit your TP right away. So if you look at my profits here, there would be some days where they come in bunches, right? Like right here, I have 2 that came right behind each other. If you look at my other profits, I mean, we got to go pretty far back. Let me see if I can go farther back. Like right here, I think these came, yeah, so this one came at 7:37, 7:38, and then like 4 minutes later, or 20 minutes later, actually. Let me see if I can find another day here. This one came a little spread out. There were some days where I had like a ton of profits. Like right here. Okay, so right here is where they came in bunches, right? You can see my entry came at 7:41. 8:14, 8:16, 8:19, 8:22. So right here, these came within a 10-minute span. 1, 2, 3, 4, about 4 trades back to back to back. And they added up. So I had a total profit of 5,000 that day. So you'll see some days like this. I mean, these days will happen every so often. This was my main account right here. It's 12,000 on this day. If you weren't here on this day, Goldie, but I accidentally, I was trying to change my lot size and I was taking these, I accidentally, it took a 25 lot size and I made like a huge profit on this day. You can see my normal lot size is 10, but for this one, I accidentally changed them a bit. So they all kind of hit, but you guys can see that these do come in bunches. So, I mean, it just depends on the day, but when the market's slow, we'll typically get maybe 1 or 2. The only problem with like the past couple of days or past couple of weeks is that there's been a lot of red flags. So like these things that we're looking at, price is always typically near the sessions very often, opening price, news price. So we can't take trades. On some days, it's so far away from these sessions where you can take as many trades as you want, but it doesn't necessarily happen consistently every day. So you might have like one really good day during the week and then 4 slow days, or you'll get like 2 regular days and 1 busy day, or 1 bad day and like maybe 3 solid days. So yeah, Goldie said, I like that. Wait for the pullback if candle is too large and intermittent drops. Yeah, no, definitely. That's something that a lot of people do. Because sometimes when you get a big candle, it does retrace a little bit, like something like this right here, right? Just looking at this candle over here, this red one, you can see it was a big candle down. It retraced up a little bit, but then it came right back down. So there's different things that you can do to you know, take advantage of those big candles. But a lot of times it's better to just sit it out. Yeah, no, definitely. I saw you take your first trade today too, Goldie. So that's good. Other than that, let me see if I could find another example over here for Parker. I'm going to look for a buy. Maybe we could find a buy entry over here. Just to show you the other direction. So this was during London session. I don't think we're going to find anything over here because the market was kind of choppy. Let me go down here real quick. This was Asia session, but you know, it really doesn't matter what time it is. I just want to see if I can find an example for you to look at. Because I did see a couple trades here during Asia. I actually took a couple of them as well. Let's see. All right, we got one like right over here. This isn't like a really good example, but I'm just going to show you one for a buy. So let me go over here and put the requirements again. So here is the requirements for the K2SR rejection. So this, now we're looking for a buy. The reason why we're looking for a buy is because just looking at it from a bird's eye view, you can see that it's bullish, right? Trend meter is green, pivots are angling up, green pivots over red, price is above it. This indicates that we're in a pretty strong uptrend. So with that said, we're going to go ahead and take a look at the requirements here. First requirement, you want to identify a bottom wick rejection. So instead of looking for a top wick, you're looking for a bottom wick, since you're looking for a buy in this point. Identify a bottom wick rejection off the K2SR V2 zone with a moderate green candle. So right here, we have a moderate green candle. Reason why it's moderate is because the wick on top is about 40 pips and the body is about 100 pips, right? So it's more than double. So this is moderate, it's fine. Wick on top isn't too big. What I'm going to do here is I'm going to draw the zone so that you can see it, clean this up a little bit, and circle this here so that your focus is on this specific candle. So we identify the bottom wick rejection off the K2SR zone with a moderate green candle right here. Second, you want to confirm that you're trading in the direction of the trend using the K2 trend meter. Down here, the trend meter is green. Also, one thing that you want to make sure is that your trend meter is set to chart. So this will give you the short-term trend. Since you're trading on the 1 minute, you only care about what's happening on the 1 minute. You don't care what's happening on the 30-minute, 1 hour, 2 hour, 4 hour, etc. If you want to trade intraday, then that's fine. You can just go to default settings and it'll give you the intraday settings. You can see here that's going to be blue because there isn't really much of a long-term trend right now due to the current market conditions. You set it to chart and then it'll give you the 1 minute trend. So with that said, you have everything set up here. Trend is obviously bullish. Trend meter is green. Pivots are angling up. Green pivots over red. Price is above it. Everything indicates for a strong bullish trend. With the first two requirements met, third requirement, you want to confirm that you're trading in the direction of momentum. Look back at the previous momentum signal. It's green right here. So with that said, all of the requirements are met. Once all the requirements are met, you can take this for a buy. Same thing that we did for a sell, just the opposite direction. Set your TP stop loss, 100 pips. Stop loss is 300 pips. You let that trade run. And there you go, full TP. So easy as that. This is why I don't really trade during Asia. You can see that typically during New York session, this will go straight to TP like after 1 or 2 minutes, right? When you're in Asia session, the market will play with you a lot because the spread's so wide and there's no volatility. So you'll be holding on to this for a lot longer than you normally would. You can see here, it kind of pulled back a little bit, just bounced around for a second. So this took about 10 minutes to hit. I mean, 10 minutes isn't that long, but it's a lot longer compared to your 2 minutes you're waiting for that TP to hit. So there goes an example for a buy. If there's any other questions, Parker, feel free to drop your questions in the chat. I'm here to help you out. So whatever you need help with, anything that you need some clarification on, I can help you with that as well. So let me check the other questions here. Another question from Goldie is asking, so it doesn't really matter how big the wick is? No, not at all, Goldie. So here's the thing. If you're looking for a big wick rejection, you want to make sure that it's not bigger than the stop loss though, right? Because if the stop loss is too big, then that is going to fit the red flag for the candle prior to entry is too big, right? So like, for example, right here, this one is fine because the criteria meets, right? Stop loss is right here. So even if it retraces to the candle, which it did, it's not going to hit your stop loss and you'll still be able to hit your TP. So there goes the examples there. All right, Eric, let me see your question. Sorry, I know you asked a question earlier. So Eric asked earlier, Sean, can you explain the psychology behind the V1? Yeah, sure. Yeah, my bad, because I was going too deep into this and I saw your question. I totally skipped over it. So let me see. Your next part here was, Sean, can you explain the psychology between the SR and V1 strategies, like the analysis you do in our live sessions? So the psychology behind the SR is that, so the reason why this works good during a ranging market is because, let me see if I could find an area where all right, so this is going to be let me just draw, I'll show you like how price was ranging over here and then how it broke out of the range and then it worked in our favor. So let's go over here and turn this off real quick. Just want to clean it up to show you and just show you my psychology behind, why we take these types of trades and why they work so well. So let's go back over here. So you can see that the market is going back and forth, right? Whenever market is going back and forth like this, you can check the range because realistically, you're only going for 100 pips, right? So the range right here is about 260 pips. This is during London session, so it's not really a good sample for like what we would typically trade during New York. But if the range is about 260 pips and you're only trying to shoot for 100 pips and price will go back and forth, this is your TP right here. So you can trade within this area. And as long as you get a good rejection, price bounces off it, it's going to hit your TP, right? So that's why like this strategy is good during ranging markets, because even the market's going back and forth, once you finally do get an entry, like I think there was one right here. Let me see if I can find it. Right here, perfect. So there's one right here because it rejects off this structure. TP would be, or your entry would be right here. You can see that if price bounces around here. So here's the thing. The thing is that price will bounce within this area. The extra confluence that you have is looking at the trend, right? So if price is trending up, that eventually when price breaks, sorry, spam caller. Whenever price breaks out of this range right here, it's likely to go upwards, right? Because we already identified the trend. So if this here is pointing towards a upwards movement, you can see that if price finally breaks out of this point, it's going to hit your TP. And it does right there. It takes longer here because this isn't during New York session, but it pretty much works all throughout the day. It just depends on like, if you're going to get some manipulation, if the spread's too wide, like the spread here is too wide. Like right now, spread is currently 320 because the market is closed, which is technically, I think 32. You'd have to cover this before you're actually making a profit. So that's why I don't trade during Asia. It's just no point. It makes it nearly impossible to scalp. But that's my psychology, why we take the SRs, because even if you're in a big range, eventually price can go and hit your profit. I know this is kind of a bad example because it's during Asia session. Let me see if I can find when the market was actually moving volatile. I think like yesterday, right? What was yesterday? The 12th? Because we did have some good entries yesterday. Where's the 12th at? Yeah, it's 12th right here. So let me see if I can just go back to this area over here. So you can see that price, I mean, it's kind of hard to see right here, but if I was to draw like where price was ranging from, which would typically be this area and this area right here, possibly. So you can see how price is kind of just ranging around this area over here. Market open right here at 630. But as price was ranging around this area, you can see that if price was to reject off one of these points, you can easily just keep writing it up even higher. So you can see the big range right here. But since this is during New York session, you have a bigger price gap, right? It's 580 pips. So what you're trying to do is you're just trying to scalp 100 pips within it. You can catch 100 pips anywhere within this point. And that's my psychology behind why we apply the SR. Because even though price is ranging, you can still catch moves. Typically, if price is pushing upwards, when you find that retracement, it's going to continue back up, right? So that's why, for example, right here, let me see if I could find one. Okay, so there's one like literally right here. It's within the range, but it's still pushing up higher. So this. So price is ranging within this high and this low, but you do get a wick rejection right here. Basically, price pushed up a little bit, it retraced down slightly, rejected off this point, and we were expecting it to continue up higher. So you get the wick rejection off structure, bullish trend with regard to the pivots and trend meter. Take the buy right here. Take that for 100 pips. You let the trade run. Full TP right there. So that's the psychology behind the trade psychology behind the SR. That's why we take this strategy during these types of market conditions. I'll show you another example for the variations. So let me see if I could find one here. I know it's gonna be hard to find because we're not really in that type of market, but I think there's one right here. Turn off the K2SR. So this works very similar to the reasoning behind the SR rejection. It's just that this works better when price is trending or moving directional. So for this specific strategy, you're looking for bias, right? So right here we have a bullish bias. We're gonna assume that's bullish. The only reason I can see that it's bullish is because the trend meter down here is green and the pivots are also bullish right here. Price is above the pivots are angling up, green is over red, trend meter is green. So we can just assume that it's bullish right here. And just looking at it from, a little bird's eye view, you can also tell that it's bullish here because you can see that this is the low right here, right? So the low was established right here, price pushed up, it retraced down slightly, and then it's still in its process of pushing back up higher, right? So the reasoning behind the variation strategy is that you're identifying a bias. So if you know that bias is bullish, you want to keep taking buys, but you want to enter on the pullback. So price is pushing up right here, price pulled back, and then it's still pushing up right here, but you can see that there's a reversal pattern. So these V1 entries, the double body, double wick, these are reversal patterns. We call them V1s, but if you ever took any type of trading course or you know how to read candlestick patterns, these double bodies and double wicks are considered reversal patterns. So you can see right here, I'll just show you one up here, another double body, right? So the double body right here, you can see it reversed. So you see the double body up there, it established a high and it reversed down here. Again, right here, I even circle this area right here. You can see how it's a double wick, two wicks right next to each other, same exact size. It's a reversal pattern. So price comes up, reversal pattern, V1 comes down. Reversal pattern right here, double wick, pushes up. There's probably another one right here, another reversal pattern right here. Double body comes down and then just keeps moving along the way. But the way that this strategy works is that you're using the reversal patterns with a bias. So the thing is, you already know what direction price is going, but you're using this reversal pattern to hop in on the continuation of price movement. So if you already know price is going up right here, it's like a no-brainer, right? Like price is going up, you're like, all right, for sure, I got to take a buy here, but where do I enter? You enter where you see the reversal pattern. So price is pushing up, retracement pushes up a little bit, retracement right here is the reversal pattern. So if you see this reversal pattern, odds are price is going to keep pushing up higher, right? So that's where the V1 comes in. So if we go over here to the requirements, and it just goes more into detail. So like, obviously you can take reversal patterns by itself, but the odds of you winning that trade are not very likely, right? Because you probably have like maybe a 50% chance of it hitting, or maybe even less. The more confluences you add to the strategy, the better your trade is, because you have different confirmations indicating that price is going to keep going, in that direction. So for the first requirement, obviously confirm overall bias, because you want to trade only in the direction of bias. You want to confirm the high low. There's a high low right there. And this is how you can confirm the reversals as well, because, whenever you see a high low, like if you see a high here, price is going to either, like you have a 50% chance. If you could see a high low right there, you have a 50-50 chance that price is either going to keep going up higher or it's going to come down, right? So once you have that 50% chance, you confirm direction, like right here, for example. You have a sell, but the trend is bullish, right? So you probably wouldn't take this trade because it doesn't fit your criteria. But with this one over here, you have a bullish confirmation. Price is indicating that everything is indicating that price is going up. And you see price retrace down here a little bit. This is going to confirm that, okay, price is likely to keep pushing up. So you already have a 50% chance that it's going to keep going up. You have another confirmation that price has been going up. This is just a retracement. So that gives you maybe, another 10 to 20% probability that price is going to keep going that direction. So with that said, you have 50% here, you add another 20% because you have a confirmation of direction. And then you look for the other things here. Pending momentum, meaning that, we have a sell signal here. So if the next signal is a buy signal, you can even measure this one right here. This candle here pushed 120 pips, right? Your profit target is only 100 pips. So odds of that happening, so like say for example, you get a buy signal right here next, and it pushes at least this much, it's going to blast right through your TP, right? Automatic win. So that's my reasoning behind this. You're basically looking for the direction of price, you're waiting for that pullback retracement, and then you're looking for the reversal back in the direction of your bias. So once you have this right here, you let it run, and there you go, full TP. And it was also a momentum signal as well. So does that make sense, Eric? You have the bare basic strategy right here. You're looking for the reversal pattern, but you're using the bias right here as well. So you're using the trend, pivots, you're using like all these other additions to the very bare basic strategy to confirm the probability of the trade. Because you only want to take trades that are quality, right? Obviously, you can take every single trade that you want, but odds of you losing the trade are going to be very high. If you look for these quality trades with all the requirements being met, that will help you understand that, okay, or it'll give you the confidence that, okay, this trade is probably going to hit. So you're not going to be worried and sweating throughout the entire trade, hoping that it's going to hit. And usually for these variations, they hit right away. Like they hit after like one candle, which is like a minute or less. And that's where the reasoning comes behind these strategies here. So if you ever look at any of the strategies, they're all kind of similar. It's just the entry points are different. For the variations, they're basically counter trend trades in the direction of bias. So whenever you see price going against the trend, you hop in when the correction happens, which is right here. That's how the variations work. Again, this would be a pivot scalp entry if you want to take another one right there. So if you want to take that one too, looks like price hits there too. So you can see that these strategies kind of align with each other. So there was actually a lot of entries right here. This right here was a V1. This was also a V2, I believe. It was also a V3 too, I think. There's so many strategies here because we have so many strategies, but they all align with each other. So same with the V2. It's the same thing, except you're looking for a strong candle. So right here, we have the low with the red candle, and it's followed by a strong green candle, right? So this would be a V1 and a V2, and then also a V3 too. So this is how you would confirm that this is a really, really good strat, like really, really good entry, because you have a V1 there. It's also a V2. It's also a V3. So you have three strategies in one entry point. Odds of it hitting are very likely. And then you can see right here that they overlap. So this right here hit full TP. And then again, right here, you have a pivot scalp entry, right? So realistically, you can make a ton of profit off like these few moves here because there's a ton of entries that align with a small little area of movement. So this would be a pivot scalp entry. Same thing, confirm overall bias, confirm a valid K2 momentum signal, which would be right here. Confirm that price is above the pivots for a buy. Pivots are right there. Price is obviously above it. And then you enter that trade right there for a full TP. Right? This is actually another entry too. This is an intraday entry. So there's a whole bunch right here. So it's a pivot scalp. There's also another intraday entry there. So right here, confirm a valid K2 momentum signal, confirm the trend meter matches, it's green and green. You enter that again right there as well for another buy. Also, like Fahad said, this is also a triple confluence. So if I was to see these entries here on the live, I would have taken them because there's so many confluences here, right? The more confluences, the better. It almost guarantees your win. Again, right here, another triple confluence. So confirm overall bias. And I have too many strategies here. I can't even keep them on the chart. All right, so confirm overall bias, bullish. Confirm a valid K2 momentum signal, valid signal right there. Confirm the signal matches the trend meter. It's green right here. Confirmed prices above the K2 pivots. It is. Confirmed prices breaking and closing past the K2 high low. There's a high low right here. This candle breaks and closes past it. All the requirements met. There's literally 3 strategies that fit for this entry right here, and then 3 strategies that fit for this entry right here. So it pretty much, I mean, the criteria is crazy. If you have like this many strategies that apply on one entry candle, you know, I'd for sure take that, because odds of it hitting are very high. All these strategies have a high win rate. So if you can combine them, odds of it hitting are very likely, right? You know, odds of it not hitting are very unlikely. So if I saw this on live, I'd probably take it, but this was pre-market. So this happened right here at 620. So either way, I probably wouldn't be able to have taken this entry here. Yeah, no problem, Eric. And yeah, definitely you're right with that too, Fahad. So question from Parker. Parker is asking, with a new account, how much would you suggest I fund my account? So for me personally, I don't even trade my personal accounts anymore, because you take on a lot more risk when you're trading your personal account. I would recommend using FTMO. I know that Marco uses MFF. MFF is like a hit or miss. I mean, if it works good for you, great, but I don't know, their servers are like kind of iffy. Sometimes they're good, sometimes they're not. I can't really recommend them, but it does work, because I know Marco has been using them and he's had the accelerated account, which means you don't have to do a challenge and you just get profit right away. And he's been doing pretty good on it. So I'd probably have to defer you to Marco for his experience trading MFF. But for me, the only funding company that I can recommend would be FTMO. The only reason for that is because I've been using them for years. No issues with payouts, no issues with servers, no issues with lag time or any of that stuff. Like they're a very professional company. They've been around the longest, so they've kind of got it figured out. MFF's only been around for, I think, I don't know, maybe 3 years now, 2 or 3 years. So they're still working out their kinks. So you can't really blame them for kind of giving shitty service. But I would definitely max out FTMO if you could. So yeah, I would recommend using FTMO if that's something that you'd like to use. If you're just scalping, it's a perfect platform to trade on, because they give you huge capital to trade for little to no risk. If you were to trade a personal account, then you'd have to use an unregulated broker. That's another reason why I stopped using my personal account, because I had to use an unregulated broker like Hugo's Way. They're okay, but once you start withdrawing like big amounts of money, there starts to be issues. So just keep that in mind. You know, one of my buddies, he was trying to withdraw, I think like 10 or 20K from his account, and they just kept giving the runaround. And the thing is, these companies are unregulated. So if they screw you and you get scammed, you have no recourse, right? You can't go and sue them. You can't go and call the police in the Bermuda Islands or something like, hey, someone stole my account, someone stole my money. They'd be like, all right, well, that's your fault. So that's like another reason why you probably don't want to use a personal account. Not that they're a bad company, because I've used the Hugo's Way for a while and they paid me out okay. It's just, I think when you start withdrawing bigger amounts, it's harder for them to transfer it out, because they have to follow certain laws as well with regard to like money laundering and stuff like that, because they're like located in like the Cayman Islands or the Bermuda Islands or like somewhere random like Madagascar. So, you know, your money could really disappear. So that's why I personally wouldn't trade on them if you had if you have a big account. If you want to trade with a regulated broker, you probably need about 10 to 20,000 minimum, because the US regulations only allow for low leverage. So you basically have to have a cash account to trade futures with them. There's TradeStation, if you want to look into that. There's AMP. AMP is like one of the other brokers that one of our members uses here too. There's TD Ameritrade. You can trade the actual future, but I don't recommend it. I used to use TD Ameritrade a long time ago, but certain assets aren't good to trade on that platform. Stocks are good, but I wouldn't necessarily trade like Forex on there, because their spreads are crazy wide. It was better before when they charged fees, but once they went for the free model, it just screwed up the whole system. So yeah, I mean, options are heavy. You have a lot of options, but I would probably recommend going to FTMO. So I'll post a link here for FTMO. if you want to check it out. There's the FTMO link right there. You can also do a practice account. So I'm not sure if Marco told you about FTMO or MFF, but basically what they are is they're a funding company. They give you a challenge criteria. So let me see if I can pull it up here. And this works perfect for our trading style because we're just scalping anyways. So if you go to FTMO, this is website ftmo.com. If you scroll down right here, and this is all legitimate. I've been using them for about 2 or 3 years now. This is where my trading got really big because I was able to trade a bigger account. Like I remember when I first got my FTMO and I first passed it, I did it as an experiment for you guys. But once I passed my first FTMO and got my first payout, I went to go buy a brand new car like right after my first payout because I knew it was legit. And then over the next couple of years, they just kept being consistent. So that's why I only recommend them. So basically, this is how it works. You basically put a deposit down, depending on how big your account is. I only have 200K accounts, so this is what I use. The fee for it is about 1,200, I believe. It's 1,080 euros. It translates to about 1,200 US. Basically, for your first step of your challenge, you have 30 days to make 10%, right? And it's not that difficult. It might seem like a lot because you see the money here. You're like, okay, 10,000. I'm gonna make 10,000 in 30 days. It's impossible. But realistically, it's not. If you trade based off percentages, you should have no problem. Like each trade that I take here is about a 1% gain or more, 1% or 2% gain. Okay, so Marco knows about it. Yeah, each trade that we take. So basically, here, I'll pull up the calculator. So basically, I'm on a 200K account. Each trade I'm making about 1,000, right? Or sorry, I'm gonna do 1,000 divided by 200,000. Oh, sorry, I'm doing the wrong button. 1,000 divided by 200,000. So it's about like half a percentage, right? If you take 2 trades a day, you'll make 1%. You only need to make 10%. So if you're consistent and you take like 1 or 2 trades a day and you don't lose, which is likely to be the case if you don't go away from the live sessions and you don't trade on your own, at least not in the beginning, you can easily make the 10,000 within a couple weeks. I would never rush it, so I wouldn't necessarily tell you to, or 20,000 actually for the 20K account. I wouldn't rush it to make it within the first week or so, but like within the next, like you'll probably use your entire month. And here's a cool thing. So if you get to your 30 days and say you're reaching 20,000 and you only made it to like 12,000, right? What FTMO will do is they'll give you an extension. They'll give you another 30 days where you can pass. So if you just stay focused and only, collect wins here and there, eventually you'll pass. The problem with most people who fail these challenges is that they want to pass right away. Like they want to pass in a day or two, which is possible, but you just increase your risk by doing that. Yeah, Marco said, remember I hit my profit target in 2 days on my 2 newest FTMO accounts. Yeah, no, exactly. Yeah, so Marco, he passed it in 2 days. It's possible, but Marco is like taking his own trades as well. So he was taking the yeah, no, he said he's a unicorn. He was taking like the live trades, but he was also just trading off my analysis. So I'm not sure if you've been on the YouTubes, but if you just listen to my analysis, there's a lot of other opportunities that you can take, throughout the day. And I'm always giving analysis all throughout the session. So yeah, no, it's possible to pass within a couple of days, but I would recommend, taking it slow and steady so that you don't have any hiccups along the way. Like I'd rather have all of you guys pass and take the entire 30 days rather than, try to pass in a day or two and then blow the account. Because that's kind of what happened with like Steven. You're not familiar with Steven, but you will be familiar with Steven when she come on to these live sessions. He's like one of our older members. He's just going back and forth a lot, but he knows what his issue is. It's just over trading, FOMOing, and it's just in his own head, but he'll get there eventually. So let me see if there's anything else over here. See, Fahad said, by the way, off topic, but earlier during the live session, you showed someone's review of K2. It still says K2 there. You should change it. Yeah, no, I haven't gone to that point yet, Fahad, but I am going to be getting to that point at some point. I think the review's still on there, right? Yeah, so we had a review from like, I'm not sure who Cliff is, but I mean, Cliff's been here for a while, or I'm sure he's been on this on the live session. So basically, or YouTube. So Cliff basically said I was introduced to Sean by my brethren, now funded 35 euros, 35K euros with FTMO simply from sitting in the sessions with K2 trades. Sean really made trading ever so simple for us. Definitely going to be joining K2 family. So basically, he's been like Cliff. I don't think Cliff's even like a premium member. He's just been sitting on the YouTubes for the past couple, I guess, weeks or months, and he's passed his FTMO. He's now funded. So yeah, I'm gonna try to change this at some point, Fod. I just haven't gotten a chance to do it yet. It's kind of difficult. You have to like, I don't know if you've ever been on Trustpilot, but they don't have any actual people to talk to. It's all like, you can't even message them. Because like before, like I would get a lot of scammers who would come on here, or different companies who would come on and just write fake reviews about K2. Like people, they just make up some BS reviews, right? And then in order for me to like report them, it's like a whole process, and it's just, no, it's weird. But I will definitely update that at some point. So let me see if there's any other questions. If there's any other questions, guys, feel free to put them in the chat. I don't see anything else right now. Let me see if I can find it. Okay, so Eric said, took a loss applying the SR strategy this morning at 11 a.m. Tell me if I'm missing anything. Sure. Let's pull that up, Eric. I know that, well, I don't know personally, but from other people that were messaging me this morning, I think like B over here. So B, he was like trading a bunch today, and he said the market was like super crazy. I wasn't trading, so I don't have any idea what the market was looking like. But he said it was like a battle, and he ended it like that with 14,000 in profit. Because most of his positions, he said lots of positions got red just by manipulation. So I'm not sure like when these positions came up, but from B, he said that there was a lot of manipulation in the market. So that was probably the case, and why you got caught in those. Eric, but let me just go back to that. So let's see, you said 11. 11, which should be right here. Yeah, Marco said I got to leave a review. It'll be legendary and from the heart. Definitely appreciate that, Marco. Yeah, I'm just here to spread knowledge, guys. Like really, we always get like a lot of, what is it? Like we get a lot of trolls and spammers that try to invade the room sometimes. And realistically, I'm just here to help you guys out. Like I don't really care about people always like talking shit and stuff, right? Because people are always talking shit. Either way, it doesn't matter if you're doing something good, you're doing something bad. It really doesn't matter. Either way, there's always going to be someone talking. So I use that as motivation to just keep getting better. Because I mean, realistically, if anyone wants to vet my trades, all of my trades are live. And they've been live for like the past 5 years. Like you can look at all the YouTube videos, and it is what it is. But anyways, back to the entry right here. So this is the trade that Eric took. Let me see if there was news around that time. I'm not sure if there was anything going on or if you heard of anything, because I typically don't trade around this time. But my cutoff for trades is usually around 11. If I am trading, after the live session. The reason for that's because we're getting close to like the mid-market, and then what happens is you get the mid-market reversal. Let me see if so. Price was bearish right here. Price consolidated. Yeah, so I'm not sure if you noticed this, Eric, but like sometimes, or when the market's moving smoothly, so from 6 to 8, our live session, price typically goes one direction. So 6 to 8, we usually have a directional market. That's typically how the market will move, right? So you can see right here, obviously price was bearish all session. Right here, from like 8 until 11, price is typically either ranging or consolidating. So if I take everything off the chart right here, you can see that price was pretty much just ranging. So right here, price was going downwards. And I don't think you knew about this, Eric, because you joined like after I used to mention this every day, like during the sessions, but you joined like during the time when market wasn't moving directional, and I didn't really go over this because people would typically ask me after the live session, like, hey, Sean, what do you think will happen next within the next couple hours? And typically this is what happens. Price will move directional during our session. It'll consolidate for a while. And then from 11 until market close, which is about 1 p.m., we have a mid-market reversal. So this might have been what screwed up your trade. I mean, there's could be a lot of things that could have screwed up your trade. It could have been a reversal due to the mid-market reversal, or it could have been based off news, or it could have been just a correction from the inflation news earlier. I just knew that the market was moving weird, so I didn't even bother trading after 8 o'clock. But let's just take a look over here. So this was your entry. I think everything else does line up though. So we do have a bearish bias. Price is pushing down right here. The other thing that I could see here that could have been the issue is that price was super overextended, right? I know there's like some sort of retracement here, but it's not a very strong retracement. In order for it to really confirm that price is like done and it's actually retraced is when it goes into consolidation. So here, let me show you an example for when price was, or let me just, yeah, okay, let's just go over here real quick. So let me turn on the high lows. Okay, so we'll use this for an example. So you can see how this was the high right here, or this is the high, and it dropped down to this point, right? This was about 1,800 pips. You can see how price pushes up, and then it goes sideways from here. And it even goes higher, it just retraces up, right? So this would be considered retracement from this overextended push. So this is kind of what, and I could see what happened with yours over here too. Let me just go and change this a little bit. Where is that zone at? So we got a zone right over here where price pretty much just went sideways. So this is where price was overextended, and then price retraced up a little bit, and then it finally broke below. This is kind of what it looks like where you were at as well. Let me see over here, except yours didn't really consolidate. So if we measure this from here, this is where the high started. Price dropped about 1,530 pips. So from here, we don't really have a strong retracement. We have these little pullbacks here, but they're not really considered retracements, right? Because you can see price comes down a little bit, small little retracement wouldn't be considered a pullback. Comes down a little bit, retracement, comes down a little bit, retracement. So from here, price has been in a heavy downtrend for a while, and it hasn't really pulled back yet. Like if you're to draw a channel right there, you can see that price has been dropping for quite some time and it hasn't retraced up. So I don't know if like you noticed this, but I would consider this overextended. So price has been pushing down for a bit right here. It would have been overextended. So I probably would have just waited a bit for an entry. Sometimes you'll see like during the live session, when price is dropping like this, you'll probably hear like me and Maddie say sometimes like, hey, we're going to wait for the first entry to hit before we take the trade. So if you look over here, this one right here, let me see if this hits. This one actually hit right here, or I don't know if this was an entry, but looks like it was. So whenever it's overextended like this, I typically want to wait a bit for like the first couple to hit before I take the trade. But it looks like this one right here would have hit, would have gotten close to stop loss, but it would have hit TP nonetheless. Yeah, I would hit TP. Looks like there was maybe another one right here too. No, the wick's too big. So let me just look at this entry here. So you take this one right here. Price came down a little more, and then it did a full-on reversal on you. Oops. Where's it at? Yeah, it looks like you just got caught in a bad trade, honestly, from my perspective. Looks like you just got caught in a bad trade because it looks like it did continue dropping. But I think this right here would be considered the retracement that we're looking for. So price was a bit overextended from this point. Let me check the news and see if there was anything at 11. 11 o'clock. There was actually news right at 11. So I don't know if you saw this right here, Eric. There was news here exactly at 11 o'clock. It was the monthly budget statement, and it was medium impact. So this might have been what screwed you, actually. It's so unfortunate that it happened like at that time. So right here at 11, this is where the news happened. And you can see where your stop loss got hit over here. It actually was correcting back to news price. So let me just check this real quick. So this is what I was saying earlier. There's like a lot of different things that could have affected your trade, but it looks like it was actually just this right here. So we have this pink line over here, which is news. Let me check what the news was like, if it was positive. So let me see. News was, that's pretty neutral. I mean, it doesn't really have anything here. But the thing is, it was a pretty high impact news. So you can see how price kind of moved away from it, and then it tried to swing back for correction. So there was news right here, right at the 11 o'clock. Price, you can see how price reacts to it. Price kind of comes down a little bit. And then your entry happened over here at, yeah, I think you got caught in the market manipulation back for correction, because it looks like it tried to correct back to news. Like you literally got in like right when it was correcting. So this is news price right here. This would have been the target for retracement or correction, because news happened right here at 11. Price dropped. It never came back for the retest. Came back down right here. And then it ended up going right back up right there. So that's the only thing that I can think of that caused it, because you can see it got closer right here, but it didn't necessarily get all the way up to news price, but it did correct back to it right there. Let's see, Fahad said it was in an SR zone 2 though. No, I wouldn't have taken it because I don't trade after 8, Fahad. I especially don't trade after 11. So the criteria here, just it wouldn't meet because it's too late in the session. Like I never trade this late. If I do trade it, it's going to be between 10 and 11. But after 11, I don't trade anymore at all. So like I would have never been in this position here. The main thing that I would have been worried about for this 11 o'clock is the mid-market reversal. You don't see it too often here because the market is moving directional, but if you go on a 10-minute, you can see it a little more. I mean, price doesn't necessarily push that heavily here because we're in the summer, so you get a lot of ranging markets. But let me see if I can find an example of the mid-market reversal, because it does happen. Okay, so here's another example right here. Let me just clean this up a little bit. And this is a 10-minute chart, so you got a lot of space in between. So let me just show you how this mid-market reversal typically plays out. I know we haven't talked about it in a while, but it still plays out the same. So from basically, you can see from 6:30 to 8 right here, price is coming down. From 8 until 10, it's like typically a lot of consolidation. Or 10 to 11, somewhere around there. So basically 6:30 to 8 when we trade directional, 8 to 10, this is usually where I get off. Price goes sideways. And then from 11 till market close, you get the mid-market reversals. Price comes down here and pushes up a little bit. Let me see how far did it push up. About 1,000 pips. But you don't really get these patterns to play out very often during the summer. You have to go like pretty far back. They're just not as smooth because the market doesn't move as smooth. All right, let's see. All right, so here's another example right here of the mid-market reversal. 6:30 to 8, bullish, price goes up. 8 to 10, consolidation. 10 to 11, some more directional movement. So you can kind of see it right here. This is when we trade during our live 6:30 to 8, directional movement up, consolidation. This is usually where I get offline. If I do come back, it'll be around like 10 to 11 right here, where I continue to ride this direction. And then from 11 till market close, till about 1, you can see how the market reverses right here. So this happened back on May 13. This is before summer. During the fall, like fall, spring, winter, you're going to see a lot of this stuff. The same pattern happens every day. It's like the same thing. We'll have a directional movement during our trading session, 6:30 to 8. And then from there, a lot of consolidation. And then some more directional movement from 10 to 11. And then from 11 till 1, market close, you get a mid-market reversal. So you get a direction here, consolidation, direction, and then reversal until market close. Because price just corrects back up. Like, for example, here, price pushed up, came back down, then it just corrected right back up. And that's the typical pattern that plays out every single day for US 30. So like, if you guys have been around for a while, you guys remembered how we took the daily entry. There would be 2 daily entries. There'd be one on open, and then there'd be another daily entry for reversal. I mean, I don't take it anymore, but you can see right here. So the first entry would have been right here at 7 o'clock for the daily. That would have been a full TP right there for 1,500 pips. And then again, right here for the mid-market reversal at 11. But yeah, going back to the breakdown, Eric, there's a lot of different things that could have affected your trade. It could have been one, the mid-market reversal. That's one thing that could have affected your trade. I think the biggest thing was the news event, though, because it was an actual big news event. It was the United States monthly budget statement. So this goes hand in hand with the inflation news that came out. So this is going to affect, the economy directly. And I think that's why this probably would have affected your trade. For a big news event like this, I typically don't trade at all like an hour before or after. If it's a smaller event, it's typically okay to just trade, within the first 5 minutes or so. But for something like this, you kind of have to see how market reacts to it. News happened right here at 11 o'clock. You can see how market reacted. Right at 11, price dropped, and then it corrected right back up to a news price right here. It didn't necessarily test it, but it did attempt to come and retest it right there. So hopefully that makes sense, Eric. I mean, there's going to be a lot of different reasons behind it, but I think the biggest reasons behind why your trade might have gotten screwed up was mainly because of the news event, because it looks like price does correct back up and then eventually just comes right back down. So you just got caught in a bad area. It was just right here, your entry came up at 11.11, price reversed a little bit, some manipulation for correction back to news price, and then it just comes right back down. Let's see, Fahad said, actually, never mind, I was looking at the candle just before. Yeah, no, it was just a bad entry. So bad entry, bad luck. It could have went either way though, Eric. Like, even though you did lose the trade, this could have easily went your direction if it just continued to move in the direction of news price, but it did the opposite. News price was down, correction, and then it came right back down after. All right, Fahad, we'll see you tomorrow. Question from PC. PC is asking, is the trending market good months to trade? Only October to November, January to May? Something like that. I mean, September is like hit or miss. Sometimes it starts earlier in September where the market starts to pick up, PC. But yeah, I mean, if you want a generalization of it, typically October to November, and then we have the holidays, Thanksgiving, Christmas, market kind of slows down a bit because everyone goes on vacation. And then people come back in January, from January till May. So those are when you get the heavy trading markets. That's usually where all the market makers, all the whales, all the big traders are in the market. You know, it's probably I forgot what the saying is called. The saying is called sell in May then go away, right? You guys heard of that? It's called sell in May and go away because the market starts to move kind of funky around May or like after May. So if you guys ever looked at the data, price typically is bullish from like November up until January. And then as we get closer to May, people sell off and then the market just gets flat during the summer. So yeah, back to what you're saying, PC. Generally, yeah, those probably be the best times to trade in a trending market. But you can still trade during the ranging market as well. It's just you're not going to get these, you know, those bigger moves where you can like swing trades. Because I've swung trades before, like you guys have seen before. I made like 15,000 on one trade one time because we caught the big swings. I don't like trading like that though. It's too risky, and then it just stresses me out. So I prefer to just lock in a couple of $1,000 per trade and then call it a day and then just rinse and repeat the next day. So, all right, I think that might be all the questions. Eric, is there anything else that you want me to cover, or is there anything else about that specific entry that you asked about? Because that's all I can think of. The only things that I can think of about this here. Let me check the sessions as well. I didn't even see if there were sessions around here. Price was right at the sessions. Yeah, I mean, it's unfortunate. I feel bad that you lost that trade, but typically, just keep in mind that there is a mid-market reversal that happens around 11. All right, perfect. So, all right, guys, I think that's it for the questions. Oh, gotcha. Yeah. So Eric's still on his demo account. Yeah, no, you're good, bro. Just stay consistent with that. Once you pass your demo, or if you're doing the trial, then just stay consistent. I mean, realistically, the best times to trade, from my opinion, is typically during the summer. I think it's good until like maybe 9. So like from 6:30 to 9 is like an okay time. If you don't get any entries from 6:30 to 8, you typically will find maybe one more entry after 8 o'clock between 8 and 9. Then I would typically cut it off, come back an hour later around 10, maybe trade from like 10 to 11. But after 11 is like my cutoff entirely. Once it hits 11, then I'm no longer trading. So, all right, guys, I think that's about it. If you guys have any other questions, feel free to reach out to me through email or on Telegram. Otherwise, we're going to call it a day, and then we'll be back here tomorrow morning for the next live session. So I think that's about it, guys. If you guys have any other questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow morning.